The 21st annual Mining Indaba this year took place in Cape Town, where more than 7,000 delegates got together to discuss issues around the mining sector. One of the key themes coming out of the conference was the effect the global downturn in the commodities markets has had on Africa's mining sector.
I mean, the general mood is that it's very difficult at the moment for mining. If you think about what's on, mining executives' agenda, I think there's sort of three things. First of all, focus on understanding and rebalancing the portfolio of assets, and if that means putting some of it on care and maintenance or perhaps selling it, then so be it. But identify and balancing that portfolio. The second thing is, for the assets that you support in your portfolio, optimize them, get the productivity up, cut the costs out, get them to operate optimally. And then the last thing, it's around cash flow, managing working capital and freeing up cash flow. Because at the moment, with the low commodity prices, there is a big strain on cash flow, and so we see executives focusing on freeing up some cash flow.
Aside from the commodities issues, South Africa's energy crisis and the negative impact it'll have on the economy and the mining sector was a topic that came up numerous times during the four-day event.
Yeah, it's it's disruptive. Obviously, we would like to use power and produce gold. I mean, that's really what we want. So, when Eskom has a problem, they come to us and say we need to reduce our consumption, and sometimes up to 20%. You can't just take 20% of your usage out of the system and be able to produce the same results. So it has affected our production. But during last quarter there weren't severe electricity constraints. Of course, currently there are more, so it's probably likely to affect us more in the future. This is not about simply a cost thing. This is about the disruptive nature of cutting back on production. What we really focus on is those areas which have basically less disruption. So we stop hoisting during the day, during peak hours. We try and push more of that electricity consumption to the evening, to the night time. I guess we work more at night now than we used to. Mills, unfortunately, if you stop turning that mill, then that's a permanent thing. So, it does affect, for instance, our surface sources at the moment. We're trying to prevent it from affecting the underground production. But, one has to see at the end of the quarter as to how bad the electricity cuts would have been.
A theme that has been consistent over the years is Africa's regulatory environment and how it is not conducive for growth.
It is concerning that 3 years after the beginning of negotiations on the MPRD Amendment Act, this thing is back in Parliament. It seems that as soon as the country resolves to do something on the policy front, no sooner has a bill being drafted and filled in Parliament that factions within the ANC itself, or different ministries and different departments, start second-guessing one another about this is the right policy or the wrong policy. Lengthy debates as soon as it's signed into bill, questions about constitutionality, questions about implementability, and then the whole thing, regulations take 2 to 3 years to take place. I think the policy cycle just is too lengthy. Too much debate, too much revision of these things.
All of these issues were in the air as Chris Bishop sat down with some of the top names in investment on the continent on a panel discussion with the headline, "Why Africa? Why now?"
Now with me here I have some investment big hitters on the continent. Starting out to my right, Ashish Thakkar, entrepreneur, grew up in England but he hails from Uganda, multi-million-pound investments. I have Robin Saunders, who runs a multi-billion-dollar investment company. He's fairly new to the continent. I have Tonya Cole, who is involved in energy with Sahara in West Africa. Rob Hertzhoff, who's South African born and bred, who now operates in London and runs Invest Africa. And Paolo Scaroni, who's the deputy chairman of Rothschild. So the first question I have for you is why Africa, why now? And if I can start with you, Robin, you're one of the newcomers to the continent here. You've got a large investment fund here. What are you finding with investment?
That's right. We started looking at Africa about a year ago, and it feels very much like 1848 gold rush, California. There's so much interest from London, as many of you are probably hear from. And everybody wants to get in on the action, and you see the very large global private equity funds pouring in as are we representing family offices and sovereign wealth funds from the Middle East and elsewhere. And everybody wants to get in on this action.
So, Ashish Thakkar.
I've never seen so much global excitement around Africa that we see here today now. When Bob Diamond and I set up Atlas Mara, a majority of our capital came from the US, and majority of that capital was capital that had never come into Africa before. So you can see there's a new wave of investor appetite, but they need the right homes to come into. So I think this is our time.
Tonya Cole, you come from a nation of Afro-capitalists in West Africa. What are you seeing?
Oh, well, as Robin said, the opportunities are immense. And one of the mismatches that we've seen is you have all this opportunity, but you need to have capital that will come in. A lot of the time we've had to bring capital locally to try to do these huge projects that we're seeing, and the local capital is not enough to do all the opportunities that we have. And that's why it's so important that what we're seeing now is a level of governance that is improving such that it can attract the FDI coming in. Because everyone wants to come in on the action, but A, they need good local partners that they can work with who understand the terrain, and B, they need those same local partners working with them to change the policies and the regulations to make it exactly right for everyone. And that's exactly what we're seeing.
We'll talk more about policy later in the debate, but Rob Hetzoff, is Invest Africa, how are you seeing it?
Governance is improving, the regulatory environments are improving. African governments are realizing there's jurisdictional competition between each other to attract foreign direct investment. And in some ways, we have to thank the Chinese for kicking it off because, you know, they set the gold rush in motion, and then everyone else woke up and started pouring in. But the timing is right. This is Africa's turn.
Paolo Scaroni, you've got deep roots on this continent in terms of business. We were with ENI here in the energy business. How are you seeing it from in perspective?
Well, the interest has been growing dramatically for Africa in the last few years. I would say that every single day we have some investor who reach Rothschild offices in order to decide which kind of investment they want to make in Africa. The reasons, very simple. GDP is growing, regulation is getting better, attraction for investment is also much stronger than before. And I'm talking in particular Sub-Saharan Africa, because while North Africa is living in a kind of limbo for investors, Sub-Saharan Africa is the place where everybody wants to be.
Now, Ashish Thakkar, if I come back to you, there's a lot of figures thrown around and optimism about the continent. There's talk of 300 million rising middle class with money to spend. How much of it do you think is myth and how much is it is reality?
This is reality, Chris. When you think about statistics and real statistics, when you think about the logic behind e-commerce, for example, which in my opinion is going to be really game-changing, the fact that only $1 billion is spent every year on e-commerce platforms, yet in the next 5 years it's going to be $75 billion. A city like Lagos has 20 million people and has 2 shopping malls. The only way the retail experience and the real commercial angle is going to kick off is by the way we've leapfrogged in other things on the continent. We're going to leapfrog in the whole e-commerce play. So I think this is real, this is genuine, and we're seeing more and more of it all the time.
So Robin, one of the things that's come to my notice is the fact that there's a lot of enthusiasm there with projects, but isn't it in the investment world people talk about returns first and the project second, but your experience is people talking about the project first and returns second.
Yes.
What do you...
Yes, as we were discussing, Chris, this has been an interesting phenomenon when you say you're open for business as an investor in Africa. Of course, you see many opportunities, and they tend to start with this incredible passion for their objectives, and it takes quite a while to get around to the returns, and there's still a bit of a mismatch between the risk-reward ratio expectations of foreign investors and the activities taking place here.
Mr. Cole, you travel the world looking for investors for your energy business. What's the reaction? I mean, how, in these difficult times in world economics, what sort of reaction are you getting?
Funnily, I still find that people still have an interest to come to Africa. I think, regardless of the fact that things have become tougher the world over, Africa still seems to be the only place where you can make returns above 20% thereabouts on projects that you're doing. And because of that, people know that this is the last frontier. This is still the place where they can come in, work regulations, work policies to suit the environment that they're coming into and make reasonable returns for now. Every single sector you look at in Africa has opportunities beyond what you can imagine. But because you don't have the data in place, it becomes difficult for them to do the returns first and then the project later. So it's all about just working a lot on gut instincts, wild, wild west, shoot first, shoot from the hip, and just go into it, dive into the project. And that's what we're doing. And it's working for us. The opportunities still exist.
I mean, Rob, you've worked both sides of the hemispheres, north and south. How are you seeing it?
Well, the reward's always been there. People know the rewards are immense in Africa, but they've always perceived huge risk. And I think what's happened over the last 5 years, and is increasingly happening, is the perception of risk is coming down. Because as people, get into the market, invest, back people, get decent local partners, they're realizing that actually the risk is way higher in Russia or China than it is in most African countries. And yet the reward here is much greater. And people are working that out. And there's a tsunami of money coming. I mean, America is just beginning to muscle up with capital and come to Africa. And if you think the money's pouring in now, it's just begun.
But also, maybe as this continent gets caught up in its own problems, a colleague of mine was saying the other day, he was telling a French journalist about the ills of South Africa, and the journalist nodded and said, oh, well, it's better than France. So, I mean, what do you say, Mr. Scaroni?
No, listen, let me touch the issue around the energy sector for a second in Africa. No? First of all, you are right, perception of risk has changed because risk is not very high in Africa. It's not as high as it was in the past. And second, in this scenario of oil prices, there is no other place in the world where you can invest and have a return at $50 a barrel price. Africa is the place where hydrocarbons will come, and all projects which are very costly projects in I don't know, the Barents Sea rather than the Arctic or the tar sands in Canada are going to be abandoned, and all the money of the oil companies are going to flow into Africa. This is what I'm expecting to happen.
Well, no investment is complete anywhere in the world without banks and financial institutions. Mr. Takar, you're from East Africa. I mean, one phenomenon we reported on in Forbes Africa is the M-Pesa revolution, mobile money. But I know all of you believe this is merely in its infancy. Do you think it's a sign of a gap and a failing in the banking system, or is it a complement to it?
I think it's a really good question. I mean, M-Pesa has been amazing because it's been very revolutionary, but it's telecom operator-led and it's mobile money. And hence, when Bob Diamond and I got together to set up Atlas Mara, the whole idea was, how do we be a positive, disruptive force in line with public policy? The fact that our continent has 11% banking, yet it has 80% mobile phone penetration. How do we make it financial institution-led, where it moves from mobile money to real mobile banking? And I think the sector does need to be positively disrupted, and that's what we're hoping to do. I think technology is going to play a huge role. Mobile money is one great start, but now it needs to leapfrog into the other angle, which needs to be led by financial institutions, which is what we're hoping to achieve.
I mean, what sort of investments are you looking at the moment in that kind of thing, mobile money, e-commerce even?
Well, at the moment, we're more focused on power, which we think is absolutely fundamental to everything else. So.
Talk more about that later. The man on the right, but I won't give anything away. But do you think it's the future, these sort of things?
Well, of course, I think there's also, we were talking about this yesterday, there's an opportunity to truly leapfrog with these sorts of statistics. That banking can accelerate quite substantially through mobile banking.
I mean, Tonya, where you come from, Lagos, is the ultimate leapfrog in technology. I mean, do you think that this e-commerce thing is merely in its infancy in terms of investment?
Absolutely. And a couple of years ago, people never believed, especially in Nigeria, that you would have cards, credit cards, debit cards. You know, it was a no-go area. And then MasterCard, Visa come in and find out that it's an exploding market. It's something that they need. Built on that and the technology, fiber optics coming in, you start finding things like Konga and Jumai, which are eBay things. Again, of which people said it can never work in Nigeria. You cannot have people making payments and then you will get the delivery coming into your house. And all of a sudden, these are growing. They're just exploding. E-commerce is exploding in Nigeria. Everyone says it can't happen, and then they step in and find out that not just is it happening, it's happening beyond imagination. And that's the beauty about Africa. It's the beauty about sub-Saharan Africa.
So, Rob, I mean, how do you think investors are going to looking to make money out of this revolution?
So e-commerce is going to explode in Africa.
Yeah.
I'm investing heavily in that area. People say to me, but the postal system doesn't work. How are you going to deliver the products? Well, if you look at the deregulation of the telecom sector, the fixed line business didn't work. Nobody had fixed lines. And then overnight, deregulation, everyone had a mobile device or a smartphone. Overnight. And African solutions came up, M-Pesa, pure African solutions to resolve the issue of limited banking penetration. The same will happen in e-commerce. People are saying to me, but how are you going to deliver the product? Wait and see. There will be African solutions overnight to delivering products to rural areas. Piggybacking maybe on existing systems of other products.
Paula, how are you seeing it?
No, it's true. Africa has the opportunity to jump a step ahead of everybody else, finding solutions which are the real modern ones, because it cannot make the whole way that we have been doing in Europe or the US, and they get to the end before anybody else. This is the case in banking. For example, banking in Kenya is very interesting for everybody because they got to a solution which nobody else yet is applying anywhere else.
Ashish, what about the banks themselves? And the financials, shouldn't they be changing as this revolution takes place?
Absolutely. I think the bricks and mortar is always going to remain a crucial element. I mean, we have banks now in 7 countries across the continent, and bricks and mortar still remains a traditional manner in which we do have to operate. However, in parallel, we do have to be more disruptive. And it's, Bob articulates this extremely well, which is what we want to do is not new to banking, but it's new to Africa. So bringing in the right platforms, how we put an intelligent layer of technology, how we make sure the front-end technology works, such as mobile banking, but the back-end as well from cloud computing. Our chairman, Arnold Ekpe, when he was running EcoBank, the kind of technology which was available at that time was very different to what we can do today. So it's elements of this nature where we can truly take advantage of what, the legacy systems that have been in place, but now what we can do going forward. And I think it also comes down to the right product places. So, the right currency exchange platforms, the right commodity platforms, the agriculture platforms. Bringing all these things in the right manner as well is going to really move the market in the financial services space.
But you have to agree, though, that there's not enough infrastructure and investment in banking as it is. I mean, most of the continent, as you know, is unbanked.
Absolutely.
Never even been to a bank.
So, and there are two, so you have two parts of this spectrum. The one Ashish is talking about, which basically touches the unbanked today and using technology like mobile telephony to reach them. And then you have the second spectrum where you have huge projects, power, oil and gas coming in, where indigenization in itself, you see this whole group of people coming up, seeing those opportunities and trying to get access to them. What I've seen happening in the last few years is that banks, especially in Nigeria, after the consolidation and all, we've found banks coming up and making good and making those payments. For example, $3.5 billion was raised by Nigerian banks for Nigerian companies in the power sector 2 years ago. 5 years ago, this was unthinkable. But we were able to raise that money to invest in the Nigerian energy sector because FDIs and foreign investors were reluctant to come into a brand new sector where regulations were only just unfolding. It had never been done. They didn't know what was going on, and so no one spent money. But this is the beautiful thing about having this new breed of Africans coming up with banks and financial institutions that can work, which is why I'm part of Atlas Mara. Let's have local banks that have international appeal, where monies can come in, because you're going to find this whole breed of African entrepreneurs who see the opportunities, are local, can pull the funding and make it work. And it's all coming together now.
Rob, quick one.
I mean, what's very exciting is 2 things. One, there's a reverse diaspora happening. So people that have left Africa for conflict reasons, for government reasons, for whatever, have been educated abroad in other countries, have learned things, are coming back because they want to come home and they know there is opportunity at home. The other is that more and more Africans are investing in Africa. So instead of trying to get your money out and investing abroad, that people are now seeing the opportunity back in their continent. So that's fueling the interest. Human capital and financial capital coming back.
Robin, if I could put you on the spot as an investment fund, if I came to you with a group of investors and say, would you give me a few $1 billion to set up a Pan-African bank, a new Pan-African bank, what would you say?
Well, I think the timing would have never been better, frankly, because in my limited experience here, and still very enthusiastic, my interaction with the commercial banks and the wholesale banking side, I have been met with great enthusiasm, professionalism, and it seems to be a well-oiled machine now. If you're working on something like a power project, they know exactly what they're doing. It's a good competition, and it's a great time for that.
No, well, there is a lot of interest for African banks. Now, of course, African banks in populated countries, you need to have a minimum of population, otherwise the interest of a foreign investor is limited. But African banks are growing, which is not the case in most of the European or in the US as well. They are more profitable than the banking system outside of Africa. So there are many investors which are already in banking in other parts of the world which want to enter Africa, from Asia, from Europe and the US.
But Ashish, I come back to you as an entrepreneur here. I mean, I can tell you something, every story we've ever covered in Forbes Africa about entrepreneur always has the same line. We went to the banks and they said no.
Yep, I've been living that for quite a few years.
Well,
you know, I mean, Chris, I've been on the receiving side of financial services for 17 and a half years before we set up Atlas Mara. And, you know, the global banks are serving the big multinationals. The traditional banking model has been such where you take customers' deposits, you put it into government treasury, make 1,000 to 1,200 basis points. Why lend to SMEs? And if you believe in Africa the way all of us do, those kind of spreads are not going to exist down the line. And therefore, if you're not a real bank for business, if you're not a bank for SMEs in the real sense, you're just not going to keep up with it over the medium to long term. And to Robin's point, there needs to be a lot more innovation. And a bank needs to be a real bank for business, which is, I think, the missing piece.
well, I think one of my favorite stories was a financial institution which remained nameless said to an entrepreneur, why didn't you come to us for funds? And the young man said, I did. Anyway, so just sounds familiar indeed. But one thing, actually, talking about your energy privatization, which you're right in the heart of, I mean, it's a good thing that a lot of the money, as you say, has come from Nigerian banks. Yes. I mean, I think that's one of the great stories of Africa that we've been covering this year. Do you think this is going to be a trend in other parts of the continent?
Yes, and you're already seeing it. So when Nigeria started the process, first of all, of privatizing the energy sector, the rest of Africa, which needs to do the same, was waiting to see if Nigeria will succeed or not. You have unions, you have legacy, you have all sorts of problems, regulatory policies. So everyone was waiting to see, would it succeed? The beautiful thing about all of this is that it succeeded. It went smoothly. Nigeria learned some very hard lessons in doing it. But as soon as that was done, then you start seeing a follow-up. So Ghana is now looking at the regulations as to how they're going to do it. Ivory Coast is looking at it to see how they're going to do it. I believe Kenya, East Africa is also doing the same. So you're seeing it's a domino effect. If it works in one country and it's successful, then it will follow through. The key issue now is whether or not the funding is going to come local or is going to come international. Very few countries can do what Nigeria was able to do, where the banks, their local banks, can pay for these purchases and this new thing. So you're going to need a lot of foreign investment coming into power. But power in Africa, the gap is like this, it's huge. That's one area where people have to look into. If you get power right in Africa, then a lot of other things you'll get right here.
But you worked in the industry.
This electricity in Africa theme is one of the most important things we have in front of us. In sub-Saharan Africa, 50% of the population do not have electricity. And without electricity, there is no development. I mean, development would be a dream. So how to solve a problem in a continent which has a lot of hydrocarbons on top? No, first of all, you have to liberalize generation of electricity, which is what Nigeria is doing, and other countries might be starting to do. But the second issue, which is extremely important, is how to build networks. because generation of electricity is one thing, but if you do not have transportation and distribution, you will not reach the population, which is your final target. Now, on this, one thing that, in my view, many African countries don't do enough is to use the funds of the European Union, which are expressly made for helping building infrastructure in Africa. And you know, there is a kind of competition between the European Union and China in how to build a presence in Africa. This is an area which can be exploited much more, in my view.
If we move on from there to the thorny subject of regulation in Africa and investment, a lot of the foreign investors I speak to, Rob, and I'm sure you speak to more, are saying to me, too much regulation, still too much red tape. We don't want to put up with this.
It depends. It's country by country. I mean, what's happening is the regulatory environment in Africa is going in the right direction. And putting the extractive industries aside, mining and oil and gas, I think the consumer-focused areas is opening up. And if you see, you know, telecom was deregulated, there was a revolution, a huge boom. That can happen. But what's happening is jurisdictional competition. You know, countries are going to have to compete against each other for foreign direct investment. It's not, you know, I'm just here to invest in Zimbabwe. If I can find a decent insurance opportunity somewhere else in a better regulatory environment, I'll invest in that other country.
Tonya, I mean, what do you think African nations can do with regulation to increase the flow of foreign investment?
Okay, so what I advocate very strongly is business and governments sitting down, talking together, and working new regulations and new policies. Remember that a lot of the policies and regulations you find in Africa go back 40, 50 years with very little changes at a time when government used to be everything and investors used to, corporations just used to do small things. The government was the biggest employer of labor. They were the ones that did all the social things. All of that is changing. Governments have now realized that they cannot do all that, but they have not changed the policies fast enough to attract the investors coming in. So we're advocating very seriously for international investors coming in to spend time with government, spend time with new corporations, local corporations, agree what type of framework will make it easy for foreign investment to come in and work that out. The beautiful thing is that governments are listening. The new governments we have coming into power these days are listening. They know, as Rob just said, that there is that there is competition for investment in countries, and we know that. The last thing that needs to be done has to do with borders. We have to break the borders, inter-Africa trade. There's so much that can be done by governments speaking to each other and determining how they can lift this border. The borders are a big problem in Africa, a big problem. And I don't know if that's a topic for today, but borders need to be lifted.
Robin, I mean, I interviewed Nicky Oppenheimer, the billionaire, for the last edition of Forbes Africa, and he said it's clear. He said all government should do is lay down the parameters, make the playing field, and then disappear. Surely that's a little bit idealistic.
Perhaps, but in our experience, we have found it to be a very friendly process. And not only on the regulatory side, but corporations working together has been refreshing, and tackling things like water supplies and fuel supplies, which are difficult in some of these regions, and they're actually coming together with the governments and each other to find a solution to accelerate delivery.
Ashish Thakkar, your president, Yoweri Museveni, I asked him years ago about government and business, and he said it's easier for a camel to pass through the eye of a needle than it is to get government out of business in Africa. What do you say to that?
Do you know, I think, I mean, to build on Tonya's point, I think we've seen a huge mindset shift from our governments. I think taking a step back, you know, as a continent, we've become so much more patriotic, right? I mean, when Ghana was playing in the World Cup, I went to Zambia, and there were Ghanaian flags everywhere. When Italy's playing in the World Cup and you go to France, they're not going to have Italian flags anywhere, right? So, I mean, we are very patriotic as a continent. However, because of regional integration and everybody, you know, when you look at the East African community, which has been a great example of regional integration, they've been very fast progressing, maybe because it's a smaller block. But Kenya wants to be the financial services hub of the region, so does Uganda, so does Rwanda, so does Tanzania. I mean, everybody's competing with each other. And I think that has created a better framework and investment climate for investors to come and plug into. Governments are listening, where they're amending policies based on what's favorable for investors, but at the same time, what's favorable for their people. And when you think about leaders, the last generation of leaders we've had have been kind of creating that democratic system and creating the stability that we require. The new generation of leaders are really trying to make a difference and create the right investment climate. The fact that we do have majority of the countries in the world in the top 10 are the fastest growing economies are in Africa, right? They are focusing on youth empowerment. Youth empowerment is a very big topic, and governments are taking it very seriously. They're a lot more passionate about it than they were 5-10 years ago. So it's great to see this mindset evolve, which is why I think on the regulatory side, I'm extremely happy with the way the shift is taking place.
But on the other hand, though, Rob, I mean, me as a taxpayer in this continent, I'm saying, well, if people do invest and make money in my country, I want to see it in the coffers. I want a share of it too. It's a very difficult bargain to strike sometime.
I think that the key is certainty. If governments set a regulatory structure and an investor comes in on that basis, that's the basis upon which they should come in and remain in and make money. And just because a company is making money and being successful does not mean the government then changes the rules. So, give investors certainty.
Yeah, certainty and stability. No, that's it. Once you have set the rules should stay in place for 20 years, 30 years, because in all the mining and hydrocarbon sector, investments have returns which are in 20 or 25 years. If in the middle you change the fiscal system, for example, or the royalty system, well, all your calculations are lost and the confidence of investors in the country is gone. And when it's gone forever.
But I was talking about your business yesterday, oil and gas, with an analyst, and he said to me, what I would do, I'd say zero tax for now, wait till everybody's spent 20 billion, and then put up the taxes. But I mean, it sounds simple, but life's not quite like that, is it?
No, it doesn't work like that, and I have to say that, generally speaking, in Africa, there has been a lot of fiscal stability. I often say that the riskiest country from this point of view is the UK, because the British government changed the tax system twice in history, and this is blasphemy in the oil industry. Really is what you would never want to happen.
Spoke to the Nimils, the mining minister of Ghana yesterday, and he said they charge 5% royalty on gold. There was discussion about increasing it a few years ago, and they decided no, because they don't want to chase investors away. Do you think we're going to see more of that?
Yes, absolutely. Remember, on two ends, first of all, a lot of policymakers and government people are a lot more educated and a lot more aware and commercially minded than they were many years ago. And what used to cause the regulatory changes was policy changes was you'd find people coming in and becoming more aware and taking a look at what was done and saying, you know what, this was a rip-off. It wasn't done with the best intention and negotiation at heart, and so they changed it. But today, you're finding that people are engaging, business and policymakers are working together for the best interests of everyone. And when you see a balanced document, you know it's a balanced document. It's when you see those documents that are not so balanced that you say, you know what, something is wrong here. And then you try and change it and you have a big problem. So the Ghanaian minister takes a look at it, thinks about it, thinks commercially about it. What would this do to the country? If I do this, there's Liberia, there's Sierra Leone, there's everyone around, including Nigeria, will be gladly willing to take them in and start mining in their backyard. So they think about these things and step back.
Rob, do you think it's a time for an end to sort of Afro-cynicism? When I first came to work on this continent 21 years ago, a businessman said to me, he said, in Africa, if you've got a piece of paper and a rubber stamp, you can rule the world. It's ruled by the civil service. You can't go anywhere. You can't do anything. What do you think 21 years later?
It's incredible what's happened in one generation. I mean, it's incredible that the continent's gone from 20% democratic societies to 60%. And the change is palpable. People are, when you read in newspapers and magazines that Rwanda is a better place to do business than Italy, you're realizing what's happening. Africa's trending in the right direction rapidly. And do you remember 5 years ago, everyone was talking about BRICS? Well, they're not talking about BRICS anymore. They're talking about Africa.
Well, let's say, Paul, I see you nodding there about Rwanda. I mean, what an amazing story. A country that's gone from virtually zero in 20 years. It's an example to us all.
Rwanda is really the example that every African country should follow. No? Rwanda has become one of the best places in the world in which to do business, in spite of the fact that in terms of natural resources, it's probably one of the poorest countries in Africa. So regulations, good government can replace resources sometimes, and this is true all over the world and in Africa as well.
But actually, isn't there going to be a tipping point somewhere, though? I was lucky enough to interview the finance minister of Rwanda a couple of years ago, and I said to him, aren't you ever worried about losing control of your country? And he said, no, we want foreign investors to come in and take over. We don't care. But don't you think there's going to be a tipping point where maybe African governments feel they're losing a little bit of control?
No, in fact, I sit on the advisory panel to President Kagame, and seeing that mindset and that vision that he wants to bring to life, it's the absolute opposite. He really wants people to come in and strengthen their own weaknesses. So, coming in and actually playing a role which will help us truly leapfrog, but in the real sustainable way. So how do we become that technology hub? And, everybody keeps on talking about, our governments keep on talking about bringing Silicon Valley to Africa. Yet our mindset is, that's more of a real estate strategy when you try and create a little real estate play and trying to bring people and make it a tech park and all that kind of stuff. That's not the exciting part for us. It's how do we take Africa to Silicon Valley? How do we change the narrative of what's going on? How do we create innovation on our continent and export it globally? But in order to do that, you need to create the right framework. You need to have the right policies in place. You need to have the right environment. So that's the kind of stuff we're focusing on, which will really create sustainability and a long-term vision which will actually take us to the next level.
As a foreign investor, do you think enough African countries have got this idea of letting the regulations, letting the investment flow, from your experience?
Absolutely. And I think that's why we're here and lots of other people, because we feel that change, and a lot of people have been waiting for this phenomenon to happen, and that's, as I said earlier, I think the timing is great.
But investors, what would they like to see, you think, changes in the future over the next 5-10 years?
Well, again, we're quite focused on power, and as I was alluding to, I think there are a couple of opportunities on the technology side to just leapfrog, where they're not laden with infrastructure they're trying to pay for that's been around, and you can just hop over that. On the power side, there are lots of examples that have happened, and where it used to take 7 years, it's now 1 or 2 years to achieve the same thing.
Tanya, we've mentioned power again. We said before this discussion that it's central to the whole African story, this idea of power. The one thing about investment in this continent that we pick up in Forbes Africa is why not? For how many years did Nigeria struggle with very little power, and all of a sudden the government said, okay, we're going to privatize, and you say it may take 5 years, but 5 years is nothing in investment terms. Doesn't it show some of the possibilities that we have with a little bending of the rigid regulations?
It tells everything about what needs to be done. And it tells everything about the realization that African governments are coming into today, that they cannot afford to do everything. The beautiful thing about low oil prices or low mineral prices, resource prices, is that people wake up pretty quickly as to what they need to do. And this is forcing regulation to go into PPPs, to go into private sector hands, to bring investors that can come in. Nigeria is a good example. My prayer is that the oil price will stay low for a little while so that more African countries would wake up and say, you know what? More foreign investors, more investment in areas that make sense. Water needs to go. Telecoms, power, all those things that are huge capital expense projects. And then the only way that they can think about this is 5 years is not enough. For power in Nigeria, we took 7-year money. It's ridiculous. You can't take 7-year money on something that is for 20, 25 years. So we've done that. Now we're going back into the market because we've de-risked it to now get long-term funding. But that has to change. All of that has to change. And I think low oil prices, excellent. Low gold prices, diamond prices, beautiful. Keep it low, and Africa will improve.
Well, I'll pray with you on that one, but I'm not sure there's many people here who would join you. But Rob, what would you, if you could have a wish list of regulations that you would like to see go by the by in this continent as an investor? What would they be?
I think the big driver is going to be regional integration. So Tonya raised this earlier. You know, the intra-Africa opportunities are immense between countries, and if we can lift barriers, make it easier for people to travel, goods and services, you know, on a regional basis, Africa will boom. Really will. That's the next thing we have to unlock.
Paula, what do you think?
So for me, the key thing is power, not to come back to something that we have been discussed, but without having power everywhere in Africa, to think about a further development would be very hard. No, we need to bring electricity to the houses of every African family. We need to have all the energy we need in order to develop the mining sector, because the mining sector is depending a lot from the availability of energy, and this will create an even more positive environment for investment here.
Okay, we're starting to wrap up this discussion now, but the analysis of investment on this continent, bearing in mind all we've said here and your experience, how do you see it? How do you analyze it?
I think, the opportunity is fantastic. I think, the big gap that really needs to be filled, in my opinion, I think, the number of private equity players, large institutions coming into the continent is fantastic. I think, but the big gap that we all need to address, the public sector is taking it seriously, the private sector needs to take it seriously too, is this whole SME sector, and how we can truly enable, empower, and inspire our young entrepreneurs and women entrepreneurs across the continent. I think that is crucial. 65% of private sector employment in South Africa is created through SMEs, yet 4 out of 5 SMEs fail. You fix that failure rate and you're fixing the unemployment issue. And I think the angle of just really creating that ecosystem of funding, access to debt and access to equity for these entrepreneurs, I think is going to be absolutely crucial.
Well, that's one thing I must ask you as an entrepreneur. There's been a whole thesis and whole arguments and reports, investigations into how to stop entrepreneurs failing. We report on entrepreneurs every month, and I don't know, there's so many reasons.
Chris, the Mara Foundation has a program called Mara Mentor, which Rob and Tonya are very involved in, and I want to make sure Robin and Paolo are by the time we end this panel. But, it's a great program which we empower over almost 600,000 entrepreneurs on the African continent. And it's just unbelievable when you see that energy and you see that buzz. We're setting up the Mara Adventure Fund, which is going to be providing equity. Starting at the age of 15 with very little capital and no ability network on our continent, I understand it firsthand. The problem is when we do these theses and we kind of remain at that 30,000 feet level is where we have the challenge. It's being practical, it's doing it in a very simple way, and just truly, our education system doesn't provide the right guidance. Our youth in our countries, their parents are either civil servants or farmers. Who do they turn to for advice? And not because I'm uneducated, but I think informal education is more important than education. And that's what we need to kind of really push on.
What do you think? I mean, you've been working here a year maybe, but you've studied a lot of entrepreneurs in that time. What do you think?
I second that, and very supportive, of course. Having said that, I would like to see the banks maintain credit quality amongst the SME lending, which has plagued other parts of the world, being a bit too aggressive with SME finance.
How do you change that, though? Sorry, I mean, how do you change that idea, that mindset? If you come in, I always say to people when we've got good entrepreneur stories, and I said, what was the face like when you went into the bank and said, excuse me, I'm going to export frogs to Egypt or something, I mean, how do you get over that?
I think it's the difference between venture capital and lending.
Sure.
And there is a different risk reward. And I applaud the venture funds that are backing SMEs.
Is there enough venture capital around in Africa right now? You're the person to ask.
It doesn't feel like it, but I think...
Doesn't feel like it. You don't feel so?
No, but let me add one thing, which I think is absolutely important to change this issue. And it's what I call the perception-reality gap. It's a huge gap. The perception that people have about Africa and what's possible in Africa is totally different from the reality of Africa. And unless you begin to change the narrative by people who are hands-on, who are here, who are seeing it, and saying what they see in the right way, you're going to continue to have this. And that's why what you're doing in Forbes and CNBC and all of that, you start seeing that there's a narrative change. And when the word starts going out properly about what can be done, what's been done, how it's been done, the entrepreneurial spirit that you see, which is amazing in Nigeria, it's amazing in Kenya, it's huge, it's amazing. And across the continent, you see that entrepreneurs, young people are coming in and doing amazing things, but no one is saying it as it should be. Once that goes out, then the confidence begins to come, and then they can work in, and then you will see venture capital wanting to put money into them. That's where it needs to change. Perception and reality, we have to close that gap.
We've got a little bit more time to discuss this, and I'd like to open this up. I mean, the one reaction we've been getting from Forbes Africa readers is that we never knew all this stuff was going on. People are doing things we never knew because the mainstream media is not covering it.
It's about wars and
People
famines
disasters,
and poverty.
wars.
Absolutely. And that's not Africa. That's such a small aspect of Africa. Such a small aspect. There's a group called the Kairos Youth Foundation in America, and young entrepreneurs thinking about innovation, wanting to come into Africa. And so I sit on the advisory board. I work with them and advise them in countries, in Africa, connecting them to young entrepreneurs so that they can do amazing things. And leapfrogging technology, they don't need to move. They just speak over whatever you call it these days, and they're connecting. And they're doing amazing things, but people are not, we don't have the platform, the media, to say exactly what needs to be done. And kudos to you, kudos to CNBC. You're speaking the African story, and more people need to do this.
What do you think, Rob? I mean, you've worked on both sides.
Get people to come and have a look. You know, I brought a trip of big investors around Africa last year. Through West Africa, Tonya was on the trip, on a private jet, down to mining in Indaba, and then back up to Central Africa. We had 14 people at various parts of the trip. Every single one of them has come back to Africa, and every single one has invested in the last 12 months. It opened their minds.
That was the first time most of them were coming.
Yeah.
But
so bring them here.
But I'm interested in you. You must speak to foreign investors all the time with Invest Africa. I mean, if someone says to you, oh, no, I'd sooner invest in Frankfurt or Lyon or something, how do you sell it to them? You Lagos or Abuja or Accra?
There are so many success stories. There are so many local champions. There's so many regional champions. And it's a process of education. It's just, and getting them here to have a look.
Yeah. The point is to explain how business friendly is this continent. Once you have been capable, through examples, of explaining that this is a place where people like to do business, then it's done. It's done because all the rest is in your favor. Demographics, growth, everything is for you. You have to explain that this is a business-friendly environment.
So, how do you, when you're talking, I mean, how do you sell?
But listen, I know fairly well 15 African countries, so I have a long list of examples to make. And normally, since I'm convinced, I'm quite convincing as well.
So Chris, the summary really is subscribe to Forbes Africa and become a member of Invest Africa. I mean,
exactly.
And then you're covered, yeah? Why not indeed? But just going back to our theme that we started not 40 minutes ago, why Africa? Why now? If anyone asks you that question anywhere in the world, what will your answer be?
Do you know, in a recent conference in San Diego, a journalist asked me, he said, when is Africa going to catch up? And I told him, I said, we're not. And he looked at me really surprised, and I said, we're going to lead the way. I don't think we're playing to catch up anymore. This is our time. We don't have to follow the path of the West in terms of the path they've taken. We truly have the ability to leapfrog. This is our time. It's ours to mess up.
Do you think that the next great entrepreneurs will be coming out of this continent?
100%, without a doubt. Without a doubt.
Robin?
I think this is a fantastic time to be here. There's not many places in the world where you, frankly, for investors chasing yield, you can start with high 20s, 30% returns and experience that yield compression. As all of the market participants become more sophisticated, it's easier, frankly, it feels easier as a newcomer, to benefit from all the experience that's been going on for the last 5 years.
Looking ahead for the next year, how much do you expect the phones to be ringing, and from which particular parts of the world, do you think?
I think pretty much everywhere. The U.S. is here in force. The Middle East is very active, and China has been here, as Rob alluded to, for some time. So the rest of us are a bit latecomers. So I think you'll just see more of the same.
And which countries in Africa will you be directing them to?
Sub-Sahara, for us.
Sub-Saharan.
Yeah.
Tanya Cole, what do you think? Why Africa? Why now?
Why Africa? Why now? I think it's an exciting time, first of all, to be African. The one thing that I see about the Africans in Africa, a lot of them from the diaspora are coming back. They want to make the changes. They really want to be hands-on and make the changes. And that helps foreign investors coming back as well, because what they can do is attach and find partners that they're comfortable with. You find a lot of Africans are very comfortable speaking the same language, they've worked in the same place, gone to the same school, so there's a comfort of knowledge. Relationship building today at different levels already exists. And so there's a comfort. I know you, I've gone to school with you, we know each other. Can I come back? Do you know who do I talk to? And all of that. So that whole due diligence issue goes down because you've grown up with people across board, and Africans have gone everywhere. And now a lot of them are coming back. And they're coming back into a continent that needs so much to be done. Entertainment, music, infrastructure, hotels, all sorts of things everywhere. And that's the exciting thing about it. It means that whatever your fancy is, whatever it is that you think your calling is, there is a role for you to play in Africa. And it's probably the only continent that has something for everyone. And that's the beauty about it. Everyone has a part to play, and everyone can do something in Africa. So you're welcome.
One last question for you, Tonya. 20 years ago, people will look at the professions, they look at government for a career, they look at, but do you think the time's come where people are looking at being an entrepreneur?
Absolutely. No,
That's it.
It's come already.
It's gone.
No, that's where we are. That's where we are. I mean, very few people now think about, you know what, I want to be a doctor, lawyer, accountant, what else is it? Architect and engineer, those five. And right now you're seeing entrepreneurs coming out in areas that they never thought existed before. Not just the IT, but even talents and skills. Talents and skills alone, huge. Nollywood, take that as an example. I mean, it's one of the best exports that we've had in Nigeria. Gone all over the place, and it's entrepreneurial, small-scale businesses, people with camcorders just sitting down and putting together, acting out their talent, and exporting it all over the world. And that's how you build industries. It's probably one of the largest employers of labor outside of the formal sector in Nigeria today. And it's just beautiful. You see people thinking about their intellect, looking at themselves. What can I do? I don't need government. How can I put myself into this place? I don't need banks, and that's another thing. I really don't need banks. I don't need government. What can I do? And begin to start small and grow. That is the best lesson that we can have. And I think you'll see a lot more about this in Africa. A lot more.
Rob.
So why Africa, why now?
Yes.
You think investors are rational? They're emotional.
Yes.
And they're driven by two emotions, greed and fear. Yeah. The greed is out there. We know Africa's booming and there's huge opportunity. I play a lot on the fear. I say, in 10 years' time, your biggest regret is going to be having not invested today.
Paulo Scaroni.
No, just a few words only on hydrocarbons, no, because when you think where to invest, you have also to compare with other alternatives. Now, in our environment of prices around $50 a barrel, you have three places where you can invest: Africa, Russia, and Middle East. Now, Russia, for the time being, is off. No, we cannot. And nobody can invest in Africa, in Russia. Middle East is becoming a quite complex place where to be and to operate. So Africa remains the only one opportunity for hydrocarbon investments in our environment of $50 a barrel of today.
Thank you very much, Paulo Scaroni, the Deputy Chairman of Rothschild, Rob Herzog from Invest Africa, Tonya Cole from Sahara, Robin Saunders from Investor Extraordinaire, and Ashish Thakkar, Entrepreneur. What else do I need to say? I'm afraid that's all we've got time for this CNBC Africa special from the Mining Indaba in Cape Town. From me, Chris Bishop, the founding editor of Forbes Africa, it's goodbye.
Chris.